Hope everyone is doing well. This is the Emini review for May the 17th, 2024. So let us go to the daily chart. So remember what I've been saying about the daily chart. We're in a trading range, big up, big down, big up. But compare the strength of this rally to the sell-off. We have consecutive sell climaxes with all the support to the left. Over here, it's a tight bull channel and a pretty strong rally. And we did test all-time highs and reverse down, but this is a minor reversal, at least for now. You know when the rally's this strong, it's probably going to get some sort of second leg, even if it's really minor. We just test the high close of the 15th. But when you see a bar like the 16th, it's a bear reversal bar closing on its low, and we're far above the moving average, possibly high in a trading range. It makes sense to exit longs below, but as far as selling below, I would not. And the reason I would not is because of what I just said. This was strong enough for a second leg, so there actually might be buyers below the reversal bar. You know the odds are, with a small signal bar like the 16th, the probability is bad. So if you sell with a stop above, go for a measured move down. What are the odds we get down here before up here? I don't know. Maybe 50-50 at best. But when it's that's not a positive equation, 1-to-1 at 50%. And when you have the buying pressure you have and a small signal bar, that might reduce your probability even more. So when we look at the 5-minute chart today, obviously we want to have yesterday's low drawn. And like I said, probably buyers below, but possibly not right below. Bar 1 is the trading range bar at the bottom of a trading range. We zoom out a little. We can see support over here. We rallied, we sold off. These are legs in trading ranges. It's a broad trading range. And then when you look at today, we're getting low in the range. And what is bar 1? It's a low 1 sell signal bar. And because of that, there's probably buyers below bar 1. And why are there buyers below bar 1 on a low 1 signal bar? Doesn't Al say when there's a bear breakout and you get a low 1, you're early in the market cycle, it's a breakout, and early on you get a low 1 short, bear reversal bar below the moving average. What's the problem? Well, there's a couple problems with it. And first of all, the context. You might have a wedge bottom here, 2 legs down here, and look at all the overlap. Is this a bear trend or is it a trading range? It's obviously a trading range. And because of that, when you get a low 1 short at the bottom of a trading range, when you think about what a low 1 short is, what happened on bar 1, you had bear short from the close of the prior day, and then you had bear shorting on the close of this day, betting this would get a second leg down. But then instead we rallied all the way up here, almost to the moving average. We closed, or we at least tested these breakout points, and then sold off again. For the bears, this is disappointing, this rally. And because of that, any bear who sold down here and then had to either scale in or just sit through this drawdown, the pullback, they're going to use the low 1 to exit shorts below. And the bulls know that. They know it's 3 legs down in a trading range, and a low 1 short is a bad stop order trade, so they're going to buy below bar 1 as well. Bar 2, it's an inside bar, another trading range bar, and everything I just said for bar 1 applies to bar 2. It's also a low 1 short. The only difference now, it's an inside bar, and inside bars are triangles on smaller time frames, and the range is compressing, and what that means is the market's getting squeezed into a tighter range. And what that really does is actually increase the probability that there's buyers below bar 1. And why is that? Because it's a trading range within a trading range. Bar 3, it's a bear trend bar, closing below the past 2 bars, but not closing below these lows. And I'm not exactly sure. So the problem with bar 3 for the bears is that it's not really breaking out of anything. I was looking to see what this was, and I'm not seeing what it was. It must have been from a few days ago. So we can ignore that horizontal line for now. And then bar 4, you can see we traded, that must have been yesterday's low, huh? So we fell below yesterday's low on bar 4 and immediately reversed up. And even these 4 bars on a higher time frame, like the 15-minute chart, these first 3 bars were a bear reversal bar, low 1 sell signal, and then it triggered on the next bar for bar 4 here, bar 2 on the 15-minute. Let's find it. And markets are fractal, and you're going to see smaller patterns similar to bigger patterns and vice versa. And when you're at the bottom of a trading range and you get a low 1, you expect buyers below, even if it takes a couple bars. And here's the buying on bar 4. Bar 5, we went sideways. The bulls were able to go sideways after the reversal bar, and that's minimum follow through, but it really wasn't a breakout. It was a bear breakout and reversal, and that's good for the bulls and possibly a double bottom. But weak stop order with the big tail on top. It's a trading range bar and a trading range. And now we have another trading range, an inside bar. Again, probably buyers below and maybe sellers above, but the sellers may not come in until up here again, maybe above bar 1 or the moving average. And keep in mind the overall bigger pattern. We're in a high 3 situation on a higher time frame. 3 big legs down, micro double bottom. Traders might be looking for an early low of the day here. Bar 6, an almost outside up bar, but it's another doji, and it could be stronger for the bulls. So this probably is not a credible bottom, and there's probably buyers below. Why aren't there buyers above? Because this is the middle of a tight trading range, and entering on stops in the middle of the range is never a good idea. Traders might buy for a quick scalp up, maybe testing the moving average, but even that's really aggressive. And for now, I would just wait. Bar 7, we did have buyers above 6. By the way, let's look at now. We have 2 bars on the 15-minute, low 1 short, and then reversal bar closing on its high. And that's good for the bulls. That's what bar 6 was. So bar 6 became a decent signal bar on the 15-minute chart for the bulls. Low 3 or high 3, 3 legs down, and then a bull reversal bar. But notice the buying pressure, decent here, big tail here, but really not enough. The bears are probably going to go a little lower before there's any major reversal, or the bulls need to go sideways at least. 7, testing higher, maybe the bar 2 high, maybe the bar 1 high, maybe the moving average, but this is not a bull trend. This is a leg in a trading range. So we might go a little higher, but bulls are scalping, bears are selling above, and that's why bar 8 went outside down. We came close to the moving average, and then immediately reversed back down to test yesterday's low once again. 7, outside bar in a trading range, and big tail below, so probably buyers below. Not a credible stop order sell. So if it's not a credible stop order sell, you can buy below. And bar 9 traded below and reversed up, but it's a weak bar, so if you bought hoping for a bull bar closing on its high, some bulls will be disappointed and exit. 9's also a double bottom with 4, but a weak signal bar after a relatively big bear bar, so probably not much to the upside here. Bar 10 triggered the high 2, the double bottom. Bulls want a breakout of the neckline and a measured move up. Bears, they see bear breakout, pullback, looking for a second leg down. They have this channel line maybe is a magnet, Plus, they want to break below yesterday's low. But look what happens. Look what's happening at yesterday's low. What's happening is there's support. So bar 10 is not a good stop order entry above, but bulls and bears will buy below bar 10 for the same reason they would buy below bar 2. And on the 15-minute chart, it's really like a low 1 or a low 2 at the bottom of a trading range. We keep bouncing here. So if there's a signal bar for the bears, that's a bull bar low in a trading range, probably more buyers below. And there were so many buyers below that traders had to chase the market up on bar 11. 11, bull trend bar, but possible second leg trap. 1, pullback 2, closing right below the moving average. In a bear channel, spike in channel, bears are going to sell rallies as they did here, as they might do here. So there's an increased risk. The bears know the bulls need at least one more bar, similar to bar 11, after bar 11, closing far above the moving average. And they're probably not going to get it, so they'll sell the close of 11. 12, bull breakout. Good follow-through bar for the bulls. Couple legs up. Couple consecutive bull bars. One big and one closing on its high. This looks like a strong breakout, but you have to respect 2 legs up after a sell climax. It's maybe a 50% pullback. You can see right where we are. So that's the danger of buying right here. So you can buy, betting that the bulls will get a second leg, but I would not buy here particularly. Probably wait for a pullback. Because we're in a trading range, the pullback could be deep, and the second leg could be really delayed. 13 pulled back and then rallied, closing on its high. That's good for the bulls. But if there is a micro gap here, it's weak. It looks like the tails, the high of 11 and the low of 13 touched. Bulls would have preferred to see a micro gap where there's no tail below bar 13. Again, a couple legs up, high 1, but in a resistance area. Strong enough. We're getting a moving average cross, and that's good, but all the bars have been below the moving average today. We're breaking out above bar 1, where there's probably sellers. But bears might not sell immediately with this much momentum. They'll look for a second entry sell. And here's your first entry sell. Bar 14, inside bear bar, reduces the probability, probably buyers below for a second leg up. 15, another inside bar, so II. Bulls see a bull flag. And the bears see a final flag, second leg trap, and then sellers above, and then a reversal. Still probably going to go at least a little higher, but dangerous to be long in this context here. 16, triggered the buy for the bulls, but disappointing. Probably bulls exiting and looking to buy lower, like below 14 or 13. $16 triggered the short, and this was a micro channel since 9, so that's the first bar that traded below the prior bar. And that reduces the probability for selling with a stop. Now you have a bad high 2. High 1, 15, high 2, 17. And you're at a resistance area where bulls bought, maybe got disappointed on 14, and exited their longs here. So do you really want to buy where bulls are disappointed? And it looks like nobody wanted to, and we fell on bar 18 a little lower. Support at the moving average, tight trading range. But the more we go sideways, the more traders will wonder, are we going to come back down and test breakout points? The market's in a trading range, and it often tests breakout points. So this blue line is a breakout point from bar 11. Decent looking bull breakout, maybe two-legged pullback, and then rally. But I think more likely will fall back in lower in the range. And then you can see bar 19 sold off quickly, because the more this goes sideways for the bulls, the weaker the trader's equation gets. Traders are becoming impatient. They wanted a measured move, and they're willing to hold here. They're long. We're getting a breakout. Maybe we come up here, test this magnet. Reasonable. But when you start to get a bear bar and then traders exiting their longs here, that's a warning that this might not be 60% anymore. and we might have to test the bottom of the buy climax. And as we go more and more sideways, we're accumulating selling pressure. Here we've had one bull bar and 5 bars. And then you can see we sold off quickly, vacuuming down on bar 19, testing support, once again testing the low of yesterday. So bear breakout, but big up, big down, big confusion. It's a trading range. Leg 1, it's a leg 1 on bar 19, so bear surprise, but the context is bad. Do you really want to sell at the bottom of a trading range? Probably not. As far as always in, I think it's been buy low, sell high all day today. I don't think it's clearly always in long or short on any bar. And then with 19, what do? Some traders might sell a pullback, but the pullback could be deep, could be all the way up to any one of these stop order sells below any of these bars. And look what happened on 20. Immediately rallying, testing higher, because traders know we're low in a trading range and we don't want to sell here. We look to sell higher. The market has to vacuum up to find a level where traders are willing to sell. And that might be the moving average combined with maybe the bar 13 low. I think you have to respect the size of 19 and bet that it'll probably get at least a small second leg down. Sorry, I forget where I was. So bar 20, buy vacuum test, because traders know bear breakout, but breakouts are also climaxes. And it's common to get breakouts that are sell vacuums or buy vacuum tests of support and resistance in trading ranges. And you can see we're low in a trading range. So the odds are there's buyers in this zone or this support area. And you can see 20 bounced. Now 20 is so strong that it might get its own second leg, so traders might not sell right above bar 20. But bar 20, like I said, 19 was enough that the bears will probably get a second leg before there's any rally that just goes straight up. 21, what happened on bar 21? Bulls knew this was strong enough for a second leg, so they bought maybe a 50% pullback of the bar. And if we look, it went to just about exactly that middle line, 50%, maybe a little more. And then traders bought. But now you have a high one, high in a trading range. So similar to over here, but opposite. This is a low one, this is a high one. How is this a high one? It's an implied high one on a lower time frame. So because of that, traders might see this as one leg up, pullback, second leg up at resistance, and there actually might be more sellers above bar 21, right below the moving average as well. And then it didn't trigger above, but there were sellers on 22. And now we have an inside bar, which is also a high one, probably sellers above, and we might come back down to test the bar 19 low before the bulls try for another reversal attempt. And we're falling on 23. Bear breakout, deep pullback. Second leg, where the bears want. The bears hope this is some kind of double top and that we fall below this neckline and go for a measured move past the 60 EMA near this channel line down to this level. The problem is it's a trading range. Traders have been buying here all day, and eventually they're going to give up and we're going to try it the other way. You can see the daily range so far is really small. This is the only way I know how to do this. So if we look, it's about 9.5 points. And I'm guilty that I actually don't know the recent average. If we look, what's an average bar? Maybe this one. So if we look at the range on this bar, we know it's probably bigger than 9. 55 points. Obviously this is a small opening range in breakout mode, and we're either going to fall below yesterday's low for a low one short that gets followed through and we trend, or more likely we try to sell below, find buyers below, as we have been, and then rally to higher prices. It doesn't mean we're going to have a bull trend day, but I do think this magnet, the bar 77 closed yesterday, was an important price that we're probably going to get back to test because it's a trading range. Bulls bought here and they got trapped. They'll probably be able to scale in and get out at their original entry, about 60%. 80% chance we come to the midpoint of two entries. What's a reasonable stop order? I don't know, maybe above bar 6, maybe above bar 10. Somewhere you buy down here. The bulls will probably get here and at least break even on their entire trade. The bears doing all they can with their power to avoid that from happening. But this support has been a problem for the bulls all day. For the bears, rather. 24 traded above 23, which was a bad stop order, so probably sellers above. And there were. Now 24 is a low one short at the bottom of a trading range, and it's a bull bar, not a bad stop order sell. It's also a triangle. And again, the market is getting squeezed, and eventually it's going to break out. It's breakout mode. And I think more likely, maybe 55, 60% chance. I don't know about 60 yet, but maybe 52, 53% chance the breakout is to the upside. But we'll see. But when you look at what's happening at yesterday's low, and we just keep trying to get below it and bounce, and get below it and bounce and rally, eventually the bears are going to give up. And if they got trapped on 19, they might use any second leg here to exit. We could actually buy and go higher on 24, on 25. But I think more likely the tail above and the moving average above 24 will reduce the number of traders buying above. We might have to go lower. And then 25, we went down, testing yesterday's low once again. Now it's leg 1, pull back, leg 2, nested leg 2. There's 2 legs in leg 2. Low in a trading range, buying below 24, buying yesterday's low really was a good trade. And traders might hold on to that to see the follow through. This is the entry bar, which obviously isn't ideal, but the bulls will see if 26 can be a good bull reversal bar. And then follow through selling 26, but possibly 2 legs down with the tail. Pull back, bad for the bulls, bad for the bears, and still at yesterday's low, not breaking far below. Disappointment 27, not the strongest stop order, but might be respectable. 2 legs down, high 2. And a bull bar, it's a bull reversal bar, even though there's a tail above. I would exit shorts above 27 for sure. Aggressive bulls will buy and see what they get for an entry bar. And then we went outside down, 28. It's common for small signal bars like 27 to get their stops run, only to reverse once again. You're getting an outside bar, but it might be maybe 3 legs down, low in a trading range. The bears really need a strong bar here. They're probably not going to get it. And when they're probably not going to get it, bulls know that and they'll buy. That's what happened on 29. Bull trend bar 29. But similar problem that 11 had, where it's right below the moving average. When you look to the left, you're in a trading range. And this might have been enough for a second leg down as well. So we get 1, 2, maybe 3. But again, 29, strong enough for a second leg, similar to bar 20. There might be buyers at yesterday's low or 50% pullback of this bar. Bar 29 got followed through on bar 30, closing above the moving average but high in the trading range. Consecutive bull bars, but 30 significantly smaller than 29, and that's a problem. And just look to the left. Do you really want to sell where we just sold? Do you really want to buy here? Probably not. And plus, 80% of breakouts get pullbacks before a second leg, so there's really no point to buy the close here. There's really no urgency, at least not yet. 31, going a little higher, but bull bodies shrinking, tail above. That's a problem for the bulls. Maybe more likely an expanding triangle. Getting high in this range, testing breakout points, probably sellers above. 32, we had a bear bar, but it's a reversal bar closing above its midpoint and closing at the moving average, which really is just sideways. 32 is a high 2 or a high 1 signal bar, similar to 15, similar to 21, similar to the low one over here. And what have I been saying? about high ones, especially with a bear bar high in a trading range. You know the odds are there's sellers above. Bulls, they got this leg, they bought a 50% pullback, and they're looking to scalp. They know this is probably not the start of a big bull trend. We fell maybe 60%, rallied. The bulls still want a test of the bar 32 or the bar 31 close. We'll see if they get it, but the odds are there's sellers above 32. 33 went inside 32, so the range is compressing. Triangle on a smaller time frame. Breakout mode, 50-50 for the breakout, and 50% chance the first breakout fails. So we might test the 28 high, which we actually did on 32. So we might try to break out below yesterday's low once again, only to reverse up. We might break out to the upside, but find disappointed bulls and then reverse down. 33 is also a high one, and that triggered on 34, which we expected sellers above. And there were. Really tight trading range, and in the middle of it, so probably going more sideways with buyers below bars and sellers above bars. 35 fell for a second leg down for the bears, maybe leg 1, complex pullback, leg 2. Bulls looking for a double bottom, buying at yesterday's low once again, but probably sellers above. 35, it's a high 2, high in a trading range, bear bar. 36, another inside bar, similar to 33. It's a high 2, but probably sellers above. Middle of the range, better to wait. 37, bull reversal bar. So bulls, they get a bull breakout, maybe 3 legs down, wedge bull flag. Reasonable to get out of shorts above 38, 37. We're low in the range. It's a reversal bar, and there's a magnet above the close of 31. And the bears, they look like they're testing breakout points to the left and buying back shorts. Weak entry bar for the bulls on 38, but also a low 1 for the bears. Actually, you can call it a low 2, low 1, 36, low 2, 38, at the moving average and a reversal bar, but the context totally sideways, and we're low in the range. The buyers might not come in directly below the bar. They might be below 37. They might be at the new low of the day, but they are there. 39, sell vacuum, 1, 2, 3 legs down. Maybe we go for a new low of the day, but is this a strong bear breakout? No, because there's a tail below the bar, and it could get stronger, and we could get follow through on 40. I think more likely there are buyers somewhere down here betting this is a wedge, and actually a wedge bull flag with this rally, and that the bulls will still get a second leg. And 40 broke out to a new low and reversed up strongly. It's a reversal bar closing on its high. Reasonable stop order buy, so bears will get out above 40, and bulls will buy and see what they get for an entry bar, which ideally would be something like 29, closing above the moving average. Really, the bulls want to get up here, break this neckline, and go for a measure move up, something like this. Look where that brings you, right to that resistance level. And then a decent entry bar on bar 41. Bull bar, crossing the moving average, uniform sized body with the prior bar, no tails, no overlap. It's really good for the bulls. We're still in the middle of a tight trading range, so any form of hesitation will probably shake bulls out of the trade. But you can see traders did buy above 40. 42, more follow through, and that's good for the bulls. Strong enough leg, it'll probably get a second leg. And look at the context for the day. Obviously a trading range, and we've had 1, 2, 3 legs down, and then a nested second. Markets are fractal, and they're always forming 2 legs and wedge tops, wedge bottoms, and trading ranges. And there's several ways to look at this. There's so many ways you can draw a wedge, and it's 2 legs down here, pull back, 3 legs down here, 1 pull back, 2, double bottom. The double bottom with these bars is also a wedge bottom, and the wedge, the second leg and the 2 legs down, was also a wedge. So that's a credible buy above 40 for several reasons. Possible low of the day, bulls want to get back up here. Bears know they're not successfully breaking out below yesterday's low, and eventually they'll give up, and this might be the give up. 43, another bull bar, good for the bulls because nothing to sell. It's a micro channel and a weak sell signal bar, probably buyers below. 44 is the same. Now, there's a problem for the bulls, and that is we had decent signal bar, decent entry bar, and then the bars are getting smaller and overlapping. And that's a wedge on a smaller time frame. If you looked at a 1 minute chart, you would see a clear 3 pushes up, and the odds are we'll come back and test lower. The trading range breakout points get tested, and that might mean the high of 40 gets tested. 45 testing lower at the bottom of the range, the channel, which became a trading range. Now it's a tight trading range at the top of a bigger trading range. But overall, we are kind of low. I think we will get up here. But this is not ideal for the bulls. And a high 1 buy, probably sellers above. And you can see we tried to go above but didn't. There were so many sell orders, traders had to chase the market down. Remember, trading range, so bull leg, yes, probably second leg, yes, but expect deep pullbacks into late second legs. Here's a leg for the bulls, and you had to sit through, if you bought up here, 3 legs down, maybe 10 bars before you got a second leg. Same thing could happen here. 46 is strong enough, it'll probably get a second leg and test lower. 47, a bull bar. Bears who were short scalped out, and bulls, they see a trend bar, a bear trend bar in a trading range, they'll buy for a scalp. But resistance at breakout points and the moving average, and the bears will probably get a second leg down. 48 had a tail below. You could argue the tail from the 47 high to the 48 low was the second leg. I think the bears might get a little more, but that is minimum for the bears. Now you have a bull bar closing on its high, and if you sold down here, you might be worried about getting trapped. But probably sellers up here. And we went a little higher and found sellers. Went outside, almost outside down, 49. Leg 1, pull back. Here could be the second leg, but we don't have to fall very far. The bears want to get down here, but what's the best case for the bears anyway? Even if they go for a measured move of this breakout bar, we're still within the trading range. That would be down here at the bar, around the bar 40, low. And we went outside up on 50. Now 50 is an outside bar in a trading range. Do you really want to buy high in a trading range and high in an expanding triangle? Easier to see on a lower time frame, but it is there. Outside bars are expanding triangles. So it looks like a good bull bar on the 5 minute chart, but we could easily get a double top here and sell off and test lower. We're very sideways, and most breakouts are going to fail. 51, high 1, implied high 1. We didn't get a technical pullback, but basically a doji at the top of a trading range, probably sellers above. And if you notice what's been happening today, I've been saying buyers below, sellers above, but a lot of the time, those limit order traders are not getting filled. And if you're trying to sell above 51, that might be a little greedy, and it's a good sell, but you might not always get filled. And traders who sell the high of the bar or the close of the bar 51, they're getting in pretty easily, and traders with limit orders above end up having to chase the market down. Bear bar, good looking bear bar and a low 2, but forcing you to sell on a stop in the middle of a trading range. And even if we sell below this neckline, there's probably buyers down here at the measured move. Inside bar 53 with a bull body, probably buyers below, but maybe not until down at bar 50. 54, you can call it a high 1, you can call it a high 2. Technically a high 1 on this chart, probably sellers above, high in the range. And once again, when there's probably sellers above, it's a good limit order sell, but you're not always going to get filled, and then you get a big bear bar, 55. Now 55, really strong looking bear trend bar. So what about selling? When you think about it, when you think about where we are, this red line that I've had drawn all day is yesterday's low. And what's happened every time we break below? Every single time we reverse up. And I don't know, that's happened 1, 2, 3, 4, 5, 6, 7, 8, 9th time here with a 0% success rate for the bears. So you're taking a 10% trade if you sell 55. 55 could also be 2 legs down, 1 pullback 2, and obviously low in the range. So even if you are breaking out below yesterday's low, we're not even at today's low. So there's probably buyers in this area. Plus, if it is a breakout, most breakouts get pullbacks, and this is not strong enough, and there's not enough sense of urgency to get short here to be selling the close. And that's why 56 was disappointing for the bears. 56 was a deep pullback, maybe 70% of the bar. It was strong enough for a second leg, which I should have mentioned, but that second leg could be what we're looking at here. Traders, they see this big bar, but they don't want to sell low in the range. Maybe they sell. I know it's a little hard to see. This lower red line is 30% of this bear trend bar, 30% pullback, 50 and 70. You can see we got about 68% before we turned back down. 56, low one short, low in the range, bull body, buyers below, and leg one pullback. We get a second leg, bears are going to scalp out. Now 57 is a surprise, and that's good for the bears, but still not enough. Whenever the bears need one more bar, they're probably not going to get it. As strong as this bar looks, it's consecutive sell climaxes, it's 3 pushes down. I'm not saying to buy the close of 57, but I would say be very careful if you're selling, because you can sell and take a chance, but the odds are we're going to reverse and close this gap. There's a gap below the 56 low, and we're probably going to close it. It's a trading range day. Breakouts are failing, wedge bottom, several reasons. And then 58, disappointing for the bulls. I need to speed it up a little. Disappointing for the bears. It's a bull bar, low one, probably buyers below, going higher. Buyers below, bad stop order above 59, so probably going to have to go more sideways before the bulls buy. 60, a bull bar, inside bar, lowers the probability, buyers below. 61, triggered the buy, but trading range, and probably going sideways. But 61 is a low one. You could call it a low two, because every double top's a low two, and we're in an area where bears got disappointed on a trading range day. The odds are there's buyers below 61, and then we didn't even trigger on 62. 3-bar micro channel. The bulls need to keep breaking resistance. The tail on bar 61 is a problem, and we still have the moving average, the 60 EMA, the 20-bar EMA, and we need to see if the bears can keep yesterday's low as resistance, which we know they probably can't. We're getting close to this breakout point where traders might, disappointed bulls who bought here, probably look to exit, and then we'll have to go lower to find buyers. 63, low one, but there were probably buyers below. This was strong enough for a second leg. And then 64 could be that second leg, but closing at the moving average after a bear breakout that might get a second leg. Closing the breakout point where bulls were disappointed and will probably also sell. And then surprise bar 65, good for the bulls. And whenever there's a surprise, you know it's a leg one. And whenever there's a leg one, you know there's probably going to be a leg two. Plus, I've thought all day that this range was small and that the breakout below yesterday's low would fail, and then we'd have to go higher. And this could be the time that we do that. Where are we going to go? Or where could we go? First of all, the close of 77 was a good magnet. Might go there. A measured move of the trading range. What's the trading range? Maybe this. I think less likely we'll go all the way up here, but maybe there's some sort of measured move. Maybe the opening range. And that one's better. Right here. The point is we're going higher. This was not supposed to be a strong bull bar, closing above the moving average. That's a surprise and a leg one. And there actually is urgency here, and traders will buy the close, even though we're getting high in the range. The bears have tried repeatedly to break out, and now the bulls are getting a chance. And then more follow through 66. Let's buy the close. I know it's hard to buy in this area, but I can delete this blue line because we're high where it's been selling all day. But have we had a rally this strong all day over here? No, we've had a strong bull bar and then a smaller bar. Strong bull bar, smaller bar. Here we're getting uniform sized bars with little overlap, and this looks like a strong breakout. And we could get a reversal day where we open. It's really a trading range day, but we get the low here. It's actually a rare day too. Only about 20% of days. Is that true? Yeah, this could be a rare day because 80% of days find the high or the low of the day by bar 18, and you can see we might have the low on bar 59, and it looks like we might go above bar 18 with this momentum here. Probably not 80% on bar 18 on this day because the range was small, and that plays a role. High 167, so sell above, right? The problem with selling above 67 is that it's a high one and a strong bull breakout. All these other high ones and low ones were weak after weak rallies and weak sell-offs, high in trading ranges and low in trading ranges. This one, you're in a strong bull spike and you have a high one with a bull bar closing on its high. And in this case, there's probably more buyers above 67. 68 going higher, bears sold above. They're disappointed with their entry bar. They might look to get out. 69, the bears are trying to get some sort of reversal, but everyone knows this was strong enough for a second leg, and bears got trapped above 63, and they probably won't get a chance to get back down here unless they do something significant up here. We're going higher on 70, buyers below. Micro channel all the way since 63. The odds are this is going to get follow through. I also should have drawn this measured move. We probably will go to this measured move of the bull breakout. Another bar, inside bar, high one. Still not ideal to sell because you're in a bull breakout. Let's look at a 15-minute chart at 15:30. Would you really want to sell this rally? Probably not. Pullback 73, but probably buyers below 72. The first pullback in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. After 11 bars, we finally got a pullback, and the odds are there's buyers below for a second leg. Now, 74 could be that second leg. Now, 73 is that high one that you sell above. It's a bear bar. It's after an extreme 11 bar micro channel, but it's a scalp. So you can sell above, but you need to get out really quickly. And when that's your entry bar, traders might just give up. Bears might just buy back their shorts right there. We did go a little lower, so you could sell above, maybe get out below. But that's 2 legs down after a strong rally, probably going higher. 76 bear bar, but buyers below. And then outside up, 77. Outside bar, so outside bars are expanding triangles, and you're high in a trading range. Yes and no, because look at the rally. We're now in a bull trend. This is a minor reversal. We could easily go for a measured move of this bull flag, and it's taking you close to this measured move up here. Followed through 78, but late in the day, probably not much time left. And then sideways. So you can see we came close to this measured move, and maybe we'll get there tomorrow if there's more time in the day. But overall, pretty interesting day. For always in, like I mentioned earlier, I didn't think it was clearly always in all day today until probably bar 65. The moving average breakout, the crossover, strong uniform bars, the context was good. You really don't want to be selling here. Other than that, though, it's really, are we always in short here? Maybe briefly, but when that's the case in a trading range, it's like opposite day. So if it's always in short, you buy. And then always in long, briefly, maybe, but when it's always in long, high in a range, you sell. And that's why I don't think about always in on trading range days or in trading ranges. I instead think just buy low, sell high, and scalp. For stop order trades, I thought Probably buyers above bar 10, sellers below, maybe not 16, but 18. Because of the trading range bar. But after several bars, 18 probably sellers below. I thought probably buyers above 27, but obviously the small bar, so the stop got ran if you had a tight stop. I thought buyers above 40, sellers below 52, and then buyers above 60, buyers above 60, aggressive buyers above 64. I was not expecting 65, but when you get 65, probably buyers on the close, buyers above, buy the close in here. What about limit orders? I talked about several, like the buy below bar 1, scale in lower, you make money. Sell above bar 6, make money. Buy below the outside bar on 8, make money. Sell above bar 1, you get filled over here. Yo! I think I was just about to talk about limit orders. Limit orders buying below. Yes, I was. Where was I? I said buyers below, sellers above. Buy the close 19, maybe. Buy the close. Buyers below 27. Thought that was a good trade. Buy the close 28. It's a market order, but it's also sort of a limit order. Same concept. You're fading. Sellers above 33. Bad high 1. Buyers below 36. Thought buyers below here, and there were. This is a high 1 on a higher time frame, so sellers above 50. Thought that was a good trade. Buyers below 56, and then surprise, but also the range was down here, so buying a little prematurely. Buyers below 58, thought there were. Buyers below 62. Buyers below any of these bars finally triggered on 72, got a quick second leg before the high 1 where traders sell. Buyers below 75, buyers below anywhere over here. And then maybe sellers above this range, but kind of dangerous to do. In this context, I thought we could easily rally up to here. Where do we go tomorrow? Or I should say Monday. High 1 buy, but what am I going to say? I've been talking about high 1s. High 1, and yes, it's a decent rally, but trading range. So when you have a bear bar, the difference with that high 1 where I said you could buy, there's no bear bars. Here we're getting sideways bear bars, all-time high. The odds are there's sellers above this high 1, but we'll see. All right, hope everyone has a good rest of their day. Thanks for watching.